Hey everyone. Of course, the legendary Oracle of Omaha, Warren Buffett, is arguably the most popular investment manager today. When Warren Buffett picks a stock and adds it to his Berkshire Hathaway portfolio, it garners attention and it garners questions like, why does Warren Buffett like this stock so much? So in this video, I'm going to bring you one Warren Buffett stock that's down 81% off its high that I think is an excellent buy for 2024. So let's dig into the details and let's try and understand why Warren Buffett likes this stock so much.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the stock I'm going to be talking about is StoneCo. StoneCo is down 81% off its high, and investors, including Warren Buffett, are interested in this stock that's now selling at a significant discount to its all-time high. Now, let's start looking at some of the characteristics of the stock and why I think Warren Buffett is attracted to this investment. Now, one of the reasons why I think Warren Buffett is attracted here is because of the management team. The management is focused on profitable growth and not just growth for growth's sake. Warren Buffett likes companies that generate cash flow and profitability. He's not very much attracted to these speculative growth stocks that are based off of hype and potential of what they could be 10 years down the line, or what some technology might do or not do for this company, right? He's focused on, what have you done for me lately? Where are the profits? How profitable are you? How likely are you to continue generating these profits? What kind of decisions are you making to run your business in a way that will continue to generate profits and cash flow, right? He's not mixed up in the hype and the enthusiasm in some of those, I'm not going to mention names, but those unprofitable growth stocks, or those growth stocks with sky high valuations because of all this enthusiasm, right? Here's one decision that I'm almost certain that Warren Buffett would like, and that is StoneCo's decision to focus on more profitable customers. So StoneCo segments their customers in two different segments, right? You can see it's MSMB clients and key accounts. You could think of key accounts like VIP accounts, right? That they get preferential treatment. And you can see that the key accounts for StoneCo are significantly less profitable, right? The take rate is a measure of profitability per customer for StoneCo. And you can see key accounts at 1.13% in the most recent quarter is less than half the profitability or the take rate of MSMB clients at 2.49%. So what management is said to be doing is placing less focus on key accounts. They're more focused on MSMB clients. They're more focused on MSMB clients. And you can see that in their actions. You can see the MSMB, the active client base. You could see MSMB clients growing by 41.7% year over year, whereas key accounts fell by 7.8% year over year. And management said it's, intentional. We're intentionally focused on the more profitable clients, and we're not trying to go after these less profitable customers. And I like that strategy. I've said this with multiple other companies that are also following a similar strategy. PayPal is said to be doing a similar strategy, and I support that strategy. You want customers that are going to generate profit for you. You don't want to go after these customers that are not going to be profitable, right? You don't want to give a customer a $1,000 deposit bonus to join your financial services company when it's going to take years and years for that customer to become profitable. Are they likely to stick around that long? Maybe, maybe not, right? So why work so hard, offer so much promotion for that one customer? Why not focus on serving those customers that are less costly to serve? Those customers that you can serve most effectively, most profitably. And that's the kind of strategy I support. And I have a hunch Warren Buffett also likes that kind of strategy. He wants profits. He wants cash flow. Doesn't want this customer that potentially 3 years later may or may not become profitable when you may or may not develop this new technology that you can serve to this customer, and they'll buy it, and then eventually they'll be profitable. That's a lot of speculation there, and that's a lot of risk taking. And why bother, right? Focus on your core customer, serve that customer well. And I think that's what StoneCo is doing. And that's one reason why Warren Buffett could be attracted to this company. Additionally, you look back at the longer term, and it has done a good job growing revenue. Revenue has increased from around 300 million in 2018 all the way up to 2.1 billion in the most recent trailing 12-month period. Also, the company has done a good job increasing its cash flow from operations from negative 600 million all the way up to 18 million in the most recent quarter, with a peak of 300 million in one quarter. And you can see an upward trend here forming nicely. And you can see those types of decisions by management to focus on more profitable growth starting to pay off in their financial metrics. Similarly, with operating income, you can see a more pronounced upward trend, with operating income up to 298 million after hovering around 80 million for a few years. And looking at the next 2 years, estimates suggest that StoneCo will grow revenue by 11.4% in 2024 and 8.6% in 2025, with earnings per share estimated to grow by 34.5% in 2024 and 19.8% in 2025. So still solid growth from a management team that is focused on more profitable customers, and thereby, sacrificing maybe some growth in that process. But even despite that fact, they're still expected to grow nicely over the next couple of years, and that is attractive to be sure. Additionally, the company has a relatively strong balance sheet with 2 billion in cash and only 900 million in long-term debt. So if the company were to get into trouble and their interest rate to refinance debt was to increase, they can use this cash to pay off the long-term debt, and they'd still have $1 billion left over. So that de-risks the business to some degree, versus if it was flipped, then it would be riskier with only 900 million in cash and 2 billion in debt, because the debt would exceed the cash and they would need to finance that or refinance that. And that's always a risk. You're exposing yourself to market interest rates. And finally, one of Warren Buffett's favorite things is a good valuation, right? You could have the very best business in the world, but if it's too expensive, then that doesn't make sense for anyone. Warren Buffett especially, who does not like paying expensive prices for stocks. That's more of Cathiewood's area. Cathiewood, another popular investment manager, doesn't mind paying premium prices for these exciting businesses with innovative opportunity. That's not really Warren Buffett's taste. He likes to have this margin of safety, a cheaper valuation, to make sure that even in the worst case, you don't end up losing too much money. And StoneCo is definitely not too expensive, trading at a forward price to earnings of 15. That's a really good valuation, especially when you compare it to the prospects you saw already. And when you look at the earnings per share estimates, it's going to grow over the next 2 years at an estimated earnings per share rate that's higher than the PE multiple. I always like to see that. So 34.5% growth rate for next year is more than double that price to earnings multiple. And then you look at the earnings per share growth rate for 2025, 19.8%, is still above that forward PE multiple of 15. So 2 years, the estimates over the next 2 years are for earnings per share to grow higher than the price to earnings multiple. And the company has proven solid earnings, cash flow growth over the years, in addition to revenue growth, and management is making decisions to boost profitability, not going after unprofitable customers. So these are all things that I think Warren Buffett is attracted to in this investment, and I don't think it would be a bad idea. In fact, I think StoneCo is a great investment to add to your portfolio for 2024 and beyond. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.